Hey, welcome back. It's JWalter here. In today's housing market update, I'm going to give you an update regarding investor purchases for real estate because those have been skyrocketing and a lot of you ask about that. I'm also have an update for you regarding rental prices as well as home prices. And of course, lastly, I'll give you a mortgage interest rate update. And before we get started, if you're new here, I'm JWalter. I'm a real estate agent here in the Sacramento area, and I post frequent housing market updates so you can make a more informed decision about whether to buy or sell a house. So I invite you to subscribe if you haven't done so already, and also check out that link below because if you're looking for a real estate agent referral from virtually anywhere in the US, then check out homeandmoney.com/Jason to get started. Okay, with that said, let's go ahead and dive into today's video, and I'm going to be sharing my screen with you right now. So this is according to Redfin. They just announced this yesterday at the time of this video. They stated that real estate investors bought a record 18.2% of the US houses that sold in the third quarter of this year. And that is a record $64 billion worth of houses, as of course growing housing and rental prices boosted returns for investors. Single-family houses made up 3/4 of investor purchases, which is an all-time high according to Redfin. Investors also had the largest market share in Atlanta, Phoenix, Charlotte, Jacksonville, and Miami. So if you're a buyer in one of these markets, you're likely going to be competing against cash investors. And I'll break this down for you too, because I have some stats to share with you regarding how each state and how each city fared, because there's some pretty big differences here. So I'll go over that here in just a little bit. So again, 18.2% of all US houses were purchased by investors in the third quarter of this year. And compare that to 16% in the second quarter, but look at that, 11.2% compared to 1 year ago. So in 1 year, we went from 11.2% to 18.2%, a really big increase. You can see that here in this graphic here. So starting in basically 2000, investor purchases have been increasing, but look at this. In 2012, 2013 is when investor purchases started going down, and they ramped up again around 2016, 2017. And personally, this is right around the time when I got my real estate license and I was helping investors buy houses. And what happened here is that home prices increased so much, but rental prices did not increase at the same rate. So their ROI for these investors went down. They stopped buying houses. I think it was in the second quarter of 2013, like BlackRock, Imitation Homes, Waypoint Homes in Sacramento stopped buying houses. But then again, it ramped up in 2017. Of course, it dropped when we had the pandemic and the lockdowns. But in the last half of 2020 and of course 2021, investor purchases absolutely skyrocketed. We're at all-time highs of 18.2%. When we look at 1 year ago, or I should say the Q1 of 2020, we're at 16.6%, which at the time was at an all-time high as well. And you should know that when we refer to a record in this report from Redfin, the records date back to the first quarter of 2000. So it doesn't go back like Corelogic, I think goes back like 35 years, for example, but they go back about 20 years. So investors bought a record 90,000 houses in the third quarter of this year. That's up 10.1% from the prior quarter and up 80.2% from 1 year ago, the second largest year-over-year gain on record. And you can see this here in this graphic here. This is the number of US houses purchased by investors. So 90,000 in Q3 of 2021. When you compare that to Q1 of 2020, of course, that was pre-pandemic, only 53,000 houses were purchased by investors. So the senior economist at Redfin stated the following: increasing home prices fueled by an intense housing shortage have created opportunities for investors to reap big profits. Those same factors have pushed more Americans to rent, which also creates opportunities for investors because investors typically turn those houses that they purchase into rentals, of course. Average monthly rents increased 10.1% year over year in September. And of course, this is one reason why investors are buying in houses right now, because of course, they're a great hedge against inflation, but rents have increased greatly as well. And of course, mortgage interest rates are at very low levels as well. And I'll go over that here in just a little bit. So this 10.7% year-over-year gain is the fastest growth in the last 2 years. Meanwhile, the median high home price, or I say median sold price, increased 13.9%. All right, so speaking of rental prices, they increased 10.2%. This is thanks to Corelogic. They actually just reported this today at the time of this video. Rental prices increased 10.2%. Miami posted a 25.7% increase of rents. That is absolutely insane. So some areas, they absolutely skyrocketed. Others, they did not. I'll go over that here in just a little bit. So U.S. family rent growth increased 10.2%, the fastest in the last 16 years. That's including single-family rental houses and condos. So the September 2021 increase was nearly 4 times the September 2020 increase. Absolutely insane. And you can see this here in this graphic here. So this is the National Single Family Rent Index, and this is year over year percent change by price tier. So I'm really looking at the SFRI, which is the Single Family Rent Index. This is the overall index for September. As you can see here, ever since around 2011 through more or less 2020, it was more or less stable. We were around, let's see, in purple here, we want to look at around 2.4 to 3, and then it dipped a little bit low to about 1.5% here, or 1.5% there when the pandemic really started. But ever since then, absolutely skyrocketed in 2020 and also 2021, of course. So Corelogic looks at 20 metro areas in the US to see how each of them compared. And there's some pretty big differences here. So all 20 metros measured here in figure 3 here had higher rent growth compared to 1 year ago. So every single city that you look at had a positive increase of rents compared to 1 year ago. So Miami, Florida led the pack there with a 25% increase compared to 1 year ago, which is phenomenal. So by the way, this cream, or I guess we got orange or pink color, is 2021 for September, and 1 year ago is in purple. So you can see here, purple is very, very small, but in 2021, rents absolutely skyrocketed, especially in Miami. Phoenix increased about 20%, Las Vegas 15%, Austin, Texas, about 15%, San Diego, about 15%, and so on and so forth. So a lot of these cities increased greatly. Even Chicago increased slightly, only about 3%. But what a difference, 3% compared to almost 26% or almost 30%. So Corelogic went on to say the following: strong job and income growth, as well as fierce competition for houses for sale, is fueling demand for single-family rentals. In addition, single-family rental vacancy rates remained near 25-year lows in the third quarter of 2021. And that's pushing the annual rent growth to double digits in September. Rent growth should continue to be robust in the near term, especially as the labor market continues to improve. All right, so that's an update regarding investor purchases as well as rental prices, but let me briefly give you an update regarding home prices. All right, so again, this is according to Corelogic. This is the most recent U.S. home price insight report they do. They do this on a monthly basis. They just posted this a couple weeks ago. So this is through, again, September 2021. So let's take a look at their forecast. So again, home prices increased about 18% compared to 1 year ago. Again, this is September 2021 compared to September 2020. So home prices increased 18%. Which is, of course, higher than rental price growth. Their forecast, though, is only a 1.9% increase, but Corelogic has been known to be wrong. So we'll see if this is going to be right. So on a national level, home prices increased 18% year over year. No states posted an annual decline in home prices. So every single state in the U.S. posted an increase of home prices compared to 1 year ago in September. The states with the highest increases year over year were Idaho, 30% increase in 1 year, absolutely insane. In Arizona, almost 30% as well. So you can see here this in the graphic depiction here, the year-over-year percent change in home prices. Here, the dark purple are the states that had the biggest increase. You can see here Nevada, Utah, Colorado, Arizona, Idaho, Montana, and Washington. Whereas the states that had the lowest were New York, for example, where they only had a 5 to 10% increase. And this is the top 10 states that had the highest price change compared to 1 year ago. Idaho, of course, 30%, but every single one of these states in the top 10 had an increase of home prices over 20%, which which is quite remarkable. So let's look at the top 10 metros in the US to see how those change, because there's some pretty big differences here as well. So Phoenix increased 31%, Las Vegas 23%, San Diego almost 23% as well. At the bottom tier of the list, which is not really much of it still is a good gain, is still 10% for Chicago, for example. In contrast though, let's have a look at the markets that are at risk of a home price decline. So here's the top markets at risk of home prices decreasing, the top 5 here. So Springfield, Massachusetts has a very high likelihood of home prices decreasing. They're saying above 70% probability of a price decline in the next 12 months. Merced, California, I'm actually pretty surprised by that. Very high as well. We also have Reading, Pennsylvania, and these other 2 cities here as well, which have a high probability of home prices decreasing over the next 12 months. So that's that. I want to give you an update regarding mortgage interest rates, because they have been fluctuating quite a bit over the past 3 months, really. So right now, according to the Mortgage News Daily, it's a website I look at to get an indication about where mortgage rates are headed, or where they have been, really. Right now, as the time of this video, which is the 16th of November, the average 30-year fixed rate mortgage is 3.27%. The 52-week low is 2.75%, and the 52-week high is 3.45%. On a 15-year note, that's 2.65%, so quite a bit lower. But let me show you here when we look at the changes over the last 3 months, though. So about 3 months ago, rates were below 3%. They absolutely increased greatly when the Fed announced, hey, we're going to be tapering the purchases of mortgage-backed securities, and we may increase the federal funds rate in the 4th quarter of 2022. That caused the interest rates to increase greatly, but ever since really the late October, they have been decreasing. So they really peaked at around 3.27% at the end of October. They decreased quite a bit, almost down to under 3% at the beginning of November, but they have been increasing greatly over the past week. So we'll have to see if this increases further, and if the federal funds rate does increase in the 4th quarter of 2022. So what are your thoughts about this? This is the biggest update here I have for you today. So I hope you got a lot of value out of this video, and if you did, please hit the like button. I greatly appreciate that, and also consider subscribing if you haven't done so already. Hope you have an awesome day, and I look forward to seeing you on the next video.